On March 31st, 2025, Strategy, formerly known as MicroStrategy, made headlines again by purchasing $2 billion worth of Bitcoin. That brings their total holdings to a staggering 528,185 Bitcoin, which now represents more than 2.5% of the total Bitcoin supply. Michael Saylor, the company's executive chairman and longtime Bitcoin evangelist, has built a reputation as the ultimate BTC bull. But while many praise him for his unwavering faith in Bitcoin, others see him as a risk to the very future of the network he claims to champion. A polarizing figure in crypto, Saylor has become one of the most influential names in the crypto world since the early 2020s. He spent billions of dollars acquiring Bitcoin and turned his company's stock, MSTR, into a de facto Bitcoin ETF proxy. On social media and in interviews, he regularly refers to Bitcoin as the most important asset in human history, likening it to Manhattan real estate and digital gold. He's consulted with US politicians and voiced support for working alongside a potential Trump administration to shape Bitcoin policy. According to Saylor, Bitcoin isn't just a currency, it's capital, and it should be accumulated relentlessly by individuals, corporations, and even the US government. Architect Partners recently predicted that by 2030, a quarter of all public companies will hold Bitcoin on their balance sheets. If that happens, much of the credit will go to Michael Saylor. But not everyone in the crypto space agrees with his vision. Does Saylor misunderstand Bitcoin? Critics argue that Saylor's version of Bitcoin, hoarded by institutions and promoted via traditional financial channels, goes against the original ethos of decentralization. In a now viral critique, crypto analyst Frank Corva wrote, "Michael Saylor doesn't understand Bitcoin. Bitcoin was originally built as peer-to-peer electronic cash, not an institutional store of value to support US dollar dominance." But Saylor advocates for government-held Bitcoin reserves and widespread use of USD-pegged stablecoins, essentially reinforcing the global reach of the US financial system. This tension raises a larger question. Is Saylor helping Bitcoin by pushing it into the mainstream? Or is he simply turning it into another tool for the legacy system it was meant to disrupt? Too much power in one's hands. Another major concern is centralization. With over 500,000 BTC, Strategy's holdings are vast. While Saylor publicly states that he's never going to sell, and even joked that his private keys should be burned upon death, the reality is that this kind of concentration creates systemic risk. In a truly decentralized network, no single person or company should have the power to crash the market with a sell-off. Yet some fear that if Strategy ever decided or was forced to liquidate its holdings, it could cause devastating price drops and shake market confidence globally. Strategy's legal and financial luggage. Beyond the philosophical debate, Strategy and Saylor have their own legal and financial baggage. Let's not forget that back in 2000, during the dot-com boom, MicroStrategy stock soared from $7 to $333, only to crash by over 60% in a single day after it was revealed that the company had overstated its revenues by $66 million. Multiple financial restatements followed, and lawsuits cost the company over $10 million. More recently, in 2022, Saylor was sued by the Attorney General of Washington, D.C. for tax evasion. He eventually settled in 2024, paying $40 million in one of the largest personal tax recovery cases in the state's history. While none of this directly undermines Strategy's Bitcoin holdings, it does cast doubt on Saylor's long-term trustworthiness in the eyes of some crypto purists. The Damocles sword of Bitcoin. So is Strategy's Bitcoin bag a ticking time bomb? Some skeptics question whether the company even holds the coins it claims to. But Arkham Intelligence recently identified that 96% of Strategy's Bitcoin addresses are held by Coinbase Prime and Fidelity, confirming their custody setup. Still, Holding so much Bitcoin in one place, regardless of whether it's real, remains a point of concern. If Strategy dumped even a fraction of their holdings, it could cause extreme volatility in the crypto markets. Even worse, if the company were ever forced to sell under financial stress, the damage could be severe. Could a rug pull actually happen? While it's easy to imagine a worst-case scenario, most analysts don't believe a full-scale rug pull is likely. Strategy is heavily leveraged, yes, but it's also expanding that leverage carefully through convertible notes, a type of debt that can be exchanged for equity. This strategy attracts institutional investors who believe in long-term Bitcoin appreciation. Currently, Strategy holds around $44 billion worth of BTC and just $8.2 billion in debt. That ratio suggests financial health, at least for now. Still, the crypto market in Q1 2025 was its worst in 7 years. And MSTR stock has been volatile. According to analysts at Goldman Sachs, it would take a 50% drop in Bitcoin price by 2027 to seriously shake investor confidence and potentially trigger a forced liquidation. Saylor, on the other hand, says if Bitcoin ever fell to $1, he'd try to buy the entire supply. With over 46% of the company's voting power, Saylor likely has enough control to block any move to liquidate, even in dire circumstances. What's next for Strategy and Saylor? Looking ahead, the real test will come in 2027, when the first round of convertible notes matures. If Bitcoin has surged by then, Strategy will be hailed as a visionary. If not, cracks may start to form. Some in the crypto space remain confident, arguing that even if Saylor were to dump his holdings, it would be a short-term dip. Bitcoin would recover. After all, no one person or company can destroy a decentralized protocol. But until then, Saylor's Bitcoin empire looms large, and with every new billion-dollar purchase, the debate continues. Is he crypto's boldest champion or its biggest risk?